So far what we have seen is the company has invited applications to the tune of 5 lakh equity shares of rupees 10 each, but issued at a premium of 1 rupee. And the company received 6 lakh and 60,000 applications, and we divided that into 3 different categories: category A, B, and C. In case of category A, we issued in full, that is 1:1 allotment. In case of category B, it is 2:1 allotment, meaning you apply for 2 shares, you end up getting only 1. The money which you have paid in excess will be adjusted towards your future installments, mostly the allotment. And lastly, we rejected or refunded category C applications to the tune of 60,000. We have looked into the transactions till this point of time. Now, in this part, what we will be doing is we will be dealing with the rest of the transactions and the adjustments which are there in the last part of the question, that is a shareholder to whom 500 shares, etc., that relates to this allotment stage or the second installment stage. The first thing which we need to do when it comes to allotment is to pass the due entry. That means we tell them that your second installment is due. You are supposed to make the payment. The moment you notify to them through email or some other means of communication, they are supposed to make the payment. They means shareholders. Now, so let me write down the accounts which are involved in this process. This will be share allotment stage. Okay, in case of share allotment stage, the money is due from the shareholders the moment you ask or call upon them to pay the share allotment money. In this case, what is the allotment money? The allotment money is rupees 5. But the thing here is you should be careful here, because it's not just 5, it is 4 plus 1, 5. Why 4 plus 1? Why not 5? Because this 1 rupee is nothing but securities premium. That is the premium which we have charged. This is not towards share capital. Only 4 rupees is towards the share capital. So this becomes our asset, share allotment money due. So this is an asset, temporary of course until they make the payment. So now why is that we are asking them to make the payment towards share allotment? Very simple reason. We will issue them shares, or in other words, share capital will be involved. So shares will be issued to those shareholders, and the moment you issue shares, your liability obviously increases. So the two elements involved in this particular transaction, wherein we are only calling upon them, we are not receiving any amount straight away. We will notify them. So one is the asset in the form of share allotment account. The other is the liability in the form of share capital. Asset, if it increases, we know has to be debited, and liability, if it increases, we know has to be credited. And also there is one more liability, which is securities premium. So that liability is also increasing. Separately, we'll have to record that. So increase in that liability. So one more account will be created, that is the securities premium account. Anyway, let me write down the journal entry. Share allotment account debit, increase in asset. Now how much is the allotment amount which is due? Total number of shares will be 5 lakhs into total amount allotment money is rupees 5. So 25 lakhs. Credit will be given to share capital first of all, to share capital. This will be 5 lakhs into rupees 4, excluding the premium of course. So this will be 20 lakhs to securities premium, which will be 5 lakhs into rupee 1. That will be 5 lakh rupees itself. So this is the entry which we are supposed to pass. Share allotment account debit 25 lakhs to share capital 20 lakhs to securities premium 5 lakhs. Now this is the easier part. So this is easy. Now which is the difficult part? The difficult part is to calculate the actual amount which we have received towards the allotment stage. Because if you look at the adjustment, before we proceed towards the next installment, we'll have to look at the adjustment here. The adjustment is in the last paragraph. So the adjustment says a shareholder to whom 500 shares were allotted under category A paid full amount on shares allotted to him along with the allotment money. That means someone who was supposed to pay only the share allotment money did not even, not only paid share allotment money, but also paid share first call. So even before this particular call has become due, he has made the payment for that particular call. That means this is nothing but advance money which he has paid. So this is known as calls in advance. Even before we have called upon them to pay, they have made the payment. So calls in advance has been received by the company. This is a liability. Why is this a liability? Because have we asked the shareholders to pay for the calls? This is a liability because have we asked the shareholders to pay for the call? Of course not. But even then they have paid, yes. So therefore, until it becomes due, until the first call becomes due, we cannot utilize this amount. So this is a liability. Then what else is there? Another shareholder to whom 1000 shares were allotted under category B failed to pay the amount due on allotment. Now this is slightly different. In the previous instance, that is when someone paid amount in advance, they belong to category A, no complications, 1:1 allotment. Whereas in this case, the person belongs to category B, wherein 2:1 allotment has taken place. Now this fellow, what is he doing? Another shareholder to whom 1000 shares were allotted under category B failed to pay the amount due on allotment. So that means he has 1000 shares and he has not paid the allotment money. So this allotment money, whatever was due towards those 1000 shares, we haven't received at all. And what did we do? His shares were immediately forfeited. So now they are talking about forfeiture. So what is this forfeiture? Forfeiture is nothing but cancellation of the shares. For what reason? Usually for non-payment of one of the installments. In this case, which installment is not paid? Share allotment is not paid. So therefore, we immediately cancel the person's shares. When we cancel the shares, we'll see what exactly we will do, but we'll come to that in a moment. But now we are concerned about how much money we have actually received during the allotment stage. So considering all this, we'll have to calculate that amount. So let me first calculate this because this is most complicated here. Now, with regard to 1000 shares, how much was due? That is something which we are supposed to calculate first. It's not actually 5000 but much less than that. Why? Because if you remember, he applied for 2 shares but ended up getting only 1. That means when he holds 1000 shares, he wouldn't have paid application money only for 1000 shares. He would have paid application money for 2000 shares. But out of the 2000 shares application money, we have utilized only 1000 shares worth of application money because we only allotted him 1000 shares. So what about that extra amount which is still with us? That will utilize towards this 5000 which is due from his side. So meaning he has paid 1000 rupees into rupees 3 per share during the application stage, which is still with us, with the company, which we haven't utilized. So that will utilize now. So 1000 shares into rupees 3, 3000 rupees. So the total amount which he was supposed to pay is 5000, but which he has already paid during the application stage is 3000. So the actual amount which is due from him towards 1000 shares on allotment right now is only rupees 2000. So this is something which we need to consider. So now that we have considered this, we can easily move into share allotment receipt entry, wherein we have to write down how much money we have received and how much money we have not received and how much money we have received in advance. So if you consider all this, then the entry will be a simple affair. So let me write down the entry: bank account debit. Now in this case, we have asked or called upon the shareholders to pay 5 lakh shares into rupees 5 per share, but we will not receive this amount. I'll tell you how. So this will be 25 lakhs, right? The money which is due towards share allotment. We will have to now go back to the first working. Now we have come back to the first working, wherein we saw that category B applicants, though they paid to the tune of 2 lakh shares, we only allotted them 1 lakh shares, telling them whatever you have paid in excess will utilize towards allotment stage. So now they have paid in excess towards 1 lakh applications. 2 lakh which they applied for, 1 lakh which they received. So 1 lakh is still with us. How much did they pay in excess? Rupees 3 per share. So that means 3 lakhs is still with us with respect to category B, which will be utilizing now towards share allotment. We have in fact shown that already in the journal entry. Let us go back to the journal entry as well. If you look at this entry, this is exactly that entry which says to share allotment rupees 3 lakhs. To share allotment, the last line, it says rupees 3 lakhs. This is nothing but the category B amount which we have received in advance. So therefore that 3 lakh will not receive now once again at the time of receipt of share allotment. Otherwise it will be duplication. So let us go back now to our entry. So 25 lakhs minus 3 lakhs which we have already received, that will not receive now. Then what else are we not going to receive? Nothing much except for the allotment amount which one particular shareholder has not paid. So that would be 2000 rupees. He was supposed to pay, that he did not pay. So that 2000 also will not receive now. Apart from that, is there anything else which we need to worry when it comes to bank? Of course, yes. A shareholder to whom 500 shares were allotted under category A paid full amount on shares allotted to him along with share allotment call. That means someone holding 500 shares paid the call money as well. So what is the call money? First call, final call, that is rupees 3. So 1500 we have already received in advance. So plus 1500. Once again, let me just explain this. This is the amount due towards allotment. This is the amount which we have already received towards allotment. This is the money which we will not receive towards allotment. This is the money which we have received towards first call. So we have to calculate this, then we will get the actual amount which we have received during the allotment stage. So 25 lakhs minus 3 lakhs will be 22 lakhs. 22 lakhs minus 2000 will be 21 lakhs 98,000. 21 lakhs 98,000 plus 1500 will be 21 lakhs 99,500. This is the amount which we have actually received from the shareholders in total. May not be only related to allotment, but in total we have received this much during this stage. So that is the thing. Now we have to pass the entry. Let me just erase all this. Bank account debit 21 lakhs 99,500. Now what is that we did not receive? 2000. So that is our calls in arrears. This is very important. We have to show that as an asset. We are hoping that that person would pay. So that 2000 which we have not received is a temporary asset until we actually receive the amount or until we forfeit his shares. So this is also increase in asset, both increase in asset debited. Then 2, share allotment only to the extent of 22 lakhs. Then what else? What else is there? One person has paid in advance. 2 calls in advance. 500 into 3,500. That's it. So 22 lakhs plus 1,500. 22 lakhs 500. 21 lakhs 99,500 plus 2,000. Once again 22 lakhs 1,500. So this is the important entry in this stage. So now that we are done with allotment receipt entry, we can now proceed towards the next thing, which is nothing but the forfeiture of shares of this person who has not paid the amount which he was supposed to pay. So let us do that now. Share capital account debit. Since we are forfeiting the shares, what we'll do is we'll cancel whatever shares we have issued to them. If you are cancelling the shares, share capital account should be reversed because it is no longer our liability. He no longer owns the shares, so this will no longer be the liability. How many shares had we allotted to him? 1,000 shares. 1,000 into 3 plus application and allotment. So we had called upon the person to pay both the application money as well as the allotment money. So 3 plus 5, but here we have to be careful because in this case 3 plus 5 is not the actual share value, it also includes premium. So in case of share capital, only 3 plus 4 will be considered, that is 7 rupees. So this will be 7,000. But did we receive the premium from that person? Of course not. So what should we do? We will reverse that also, but separately. Securities premium account. So that would be 1000 shares into 1 rupee, 1000 rupees. So 7,000 plus 1,000, 8,000 is debited. Now, what about the money which we have already received from that particular shareholder? That will be credited to an account called share forfeiture account. Amount which we have already received from this particular shareholder. How much has he paid? He has paid only the application money, but he has not paid application only to the extent of 1000 but 2000 shares. So that will be 2000 shares into rupees 3, which is 6000. Okay. Then 2. What else should be credited? We should also credit calls in arrears which we had created here as an asset. We had created that as an asset assuming that, hoping that he would make the payment at some point of time in future. If he does not make the payment and if we decide that we will cancel his shares, then we will reverse that asset by crediting. Decrease in asset shall be credited. So 2 calls in arrears. Same 2000. That's it. Now if you want to look at the entry, yeah, this is the one. Share capital account debit 1000 into 7, 7,000. Securities premium account debit 1000 rupees, 1000 shares into 1 rupee. To share forfeiture account amount which we have already paid or which we have already received 2000 rupees, 2000 applications into 3 rupees per application, 6000. And finally to calls in arrears 2000. This is also a liability. Share forfeiture is actually a profit. See, it's a capital profit. It's not our day-to-day profit, but it's a capital profit. I'll tell you how. We have already received 6,000, but have we given anything in return? We had issued the shares, but now that we are cancelling the shares, we owe him nothing, and he has paid already 6,000 to us, to the company. That 6,000 will be our capital profit, which we'll have to transfer to a separate account. We'll come to that in a minute. Then calls in arrears is nothing but an asset which is being cancelled. That's it. So now we are done with most part of the problem. The only thing pending would be the last stage, which is the first call. Call has not been made, they say, no? Yeah, the first call is not made, but they say his shares were then reissued at rupees 17 per share. Sorry, at rupees 14 per share as rupees 7 paid up. Okay, we'll look into that. So now the company not only cancelled his shares, but they reissued it. So that means company is once again receiving money from a new shareholder. So how many shares did we cancel just now? 1000 shares. These 1000 shares are now being reissued at what price? At rupees 14. But as 7 paid up. The company is considering only 7 rupees as paid up, but they are receiving 14 from the shareholder. You receive 14, but you only consider 7 as paid up. That means the remaining 7 is nothing but securities premium. Once again, we are charging premium. Okay, from the new shareholder as well. So now let me pass the entry. This is direct bank entry. That's all, nothing much. Bank account debit 1000 shares into rupees 14, which will be 14,000. Then 2 share capital. This will be 1000 shares into rupees 7, only the capital part. Rest will be to securities premium. That's it. Next, what else? Okay, we have more or less covered everything which is there in the problem, but something which is not mentioned there in the problem is this. At the end of the day, once you have forfeited something, you have to transfer that to a separate account called capital reserve. Capital profit shall be transferred to capital reserve. Now, before we do that, we should check if we have utilized the share forfeiture account anywhere. where can we utilize that? There is only one way we can utilize that, that is with respect to possible issue of those forfeited shares at a discounted rate. But in this problem, no such thing has happened. So therefore, we need not worry about that. So therefore, whatever is there in the share forfeiture account can be directly transferred to capital reserve. So how do we do that? Just by passing a very simple entry. Share forfeiture account debit. We are cancelling this liability. Liability getting reduced. Debit 6,000 to capital reserve. 6,000. That's it. So this is the second part of the problem, wherein we have looked into allotment stage due entry, allotment stage receipt entry, which is the most important stage according to me. Then we have looked into the forfeiture of shares of that person who has not paid money to the tune of 1,000 shares. Then we also looked into calls in advance. So then finally forfeiture and reissue of those forfeited shares. Now this problem has been asked, or rather is there in the sample question paper for 8 marks, which is a significant amount of marks considering the total exam will be for 80 marks. So if at all you have any doubts with respect to this particular problem, or if you have anything to say, please do drop your comment below. So we'd be happy to hear them. Thank you.